Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is an update on the Iran war. We're going to talk about the situation as it stands right now. I'm going to pass along some of the analysis that I've heard from all around the world and essentially what we're looking at for the near future, where we stand, where this thing may be going, and we're also going to take a look at the key markets. Now, to be honest with you, the markets lineup is a little bit light today. We've got one trade idea that we want to update. We've already hit those yen updates a million times. They panned out pretty good, not too bad. I was really happy with the initial move on that U.S. dollar Japanese yen. It did sell off a little bit today, hit the 62%. I might go over that. I might not. Bitcoin, we do need to talk about Bitcoin and crypto, but we're going to start off with U.S. oil and what looks like it could be the beginning of a big-time bull run. It just looks like we're going higher. That's all I can really say about it. It just looks like we're going higher. And the reasons, well, we're going to go over the reasons. And a lot of it has to do with troops on the ground. And I'm going to share my analysis. Really, some of these ideas aren't really new. I didn't sit around the chalkboard all night going, okay, here's what's going to happen. I didn't do that, but did some research, and I think it's fairly plain to see what we're going to be dealing with here in the Iran situation relatively soon. So if there's any markets at all you guys would like to look at, be sure to drop those in the live chat, either over there on YouTube or in the How to Trade trading room. I want to welcome everybody to the Switch Markets Live edition. If you need a place to trade, of course, Switch Markets has got you covered. So we're going to look at a few 9 EMA trades. We backed off the duration to about a 4-hour chart. And I was taking a look at a couple of trades that actually were pretty darn good positions. So a lot of folks ask me, Shane, 9 EMA, what time frame? I say, well, you know, that 4-hour chart's pretty solid. It's a swing trading approach at that point. It's not scalping, but it's pretty solid. So we'll take a look at that as well. Let's see. Tina Jin, good to see you. Hi, Shane. Early for you. Yeah, it's pretty early. Trump's speech, send the market spike. Yeah, anytime Trump talks these days, things are going to happen. And some of the stuff coming out of Washington, D.C., can't really believe right now. I mean, it's all over the map. But good to see Andrea Garwald. My pleasure. Tuku, good to see you. Tuku, Bobby Bob. All right, guys, let's just go ahead and start off with a trade idea, trade update that we put out last night. This was on U.S. oil. And unfortunately, the market ran before we could get there. But we're going to go over how you can adjust maybe your Fibonacci's and have a chance really from that 72.50 area. It's going to be pretty juicy if we can get an opportunity to bid from down there. That's the big challenge. Let's see. Packham, good to see you. Hey, Shane, unemployment data views. Well, yeah, I mean, we're going to look at some of the data that just dropped, the initial jobless claims. We'll go over those as well. We've got an EIA natural gas report coming out later today, a supply report that's going to be big as well. Okay, let's go ahead and take a look at U.S. oil to start with, though, and everybody's talking oil, and they're talking Strait of Hormuz and oil. We covered the Strait of Hormuz yesterday, but as you can see, I mean, right here, we took out this top right here, which was about 77.98. We took a little bit of a peak, 78.09, and then sort of got a big reversal. Right now, we're fighting. We're really fighting that 78 level. We're thinking 80s. I'm thinking 85s, 90s. There's a lot of people out there that believe that where we are in the war isn't really where we thought we would be. And I don't necessarily know how they get to that conclusion, but I do know this. Crude oil is going up, and it's because of those supply concerns coming out of the Strait that we covered yesterday. So be ready, beware. If there's any market driver that you are looking at right now, if you're looking at one keyword, Strait of Hormuz. I mean, that's the bottom line. That thing gets shut down, oil spikes, stocks crash. It's the way it is. So we're going to find out relatively soon if that's going to be the case. Who knows, though? Maybe there's a deal announced. If Trump's speaking, then maybe they have a deal. Who knows? It might. As far as I'm concerned, they're not even talking right now. So I don't know. I don't know what to make of any of that. Let's see. Morning, Shane. Good to see you, Jason. Welcome. But yeah, I'll give them my unemployment data views as well. Lita, good to see you, Lita. Okay, but so this U.S. oil essentially is very simple. We were looking at bid 72.55s. Didn't get them. Pushed higher. So this is the way that you adjust your Fibonacci's if you're interested in this type of trading. You just move it right up to that top. Now, initially, I liked the market structure a lot better when we were right in here. Very uniform, but still, this isn't bad. And this actually could be a really good trade, especially if you get some bearish price action going into NFP tomorrow, which we will have for you live as well. So I feel like I've been up for about 5 days, So if I start babbling a little bit, just give me a sign, give me the signal, give me a chicken wing. Say, Shane, get back on task. But no, we've done a lot of this stuff this week. It's been a good week. Challenging day yesterday, very, very challenging. On the Dow, I showed you the chart. It was brutal. But this today is going to be better. It really will be. It can't be really any worse. Bitcoin right here. Interesting stuff happening in Bitcoin. All of a sudden, we're catching bids and we're up above that 70,000 level, which is huge. It really is, because we were stuck for the longest time rotating between about what that 59 zone and 70. And Bitcoin really was sort of in jail. It was in a phone booth. It was not moving. And when we look at Bitcoin now, that's a yearly chart. I rarely pull yearly charts, but it's important to see exactly what's happened. We washed out 2025's lows, and now we've bounced. So the real question is, are we going to see sustained selling, or is the worst of this over? And there's a chance the worst of it's over. Now, when you look at this chart and this formation on a yearly, a couple of observations. Number one, our yearly range, aside from 2024, pretty much par for the course already when you're looking at 2020, 2021, 2022, 2023. So how about last year? We've pretty much already got last year's range in. Do we see the reversal in the run to 125,000 this year? Something like that? That's going to make for a very awkward chart. I'm not sure that you're going to see that. I think this is going to take some time to shake out, so I'm not in a real big hurry to dive in and buy all my Bitcoin and sit around with my fingers crossed thinking we're going to win. There's some things that are happening to crypto in this Iran war. I mean, we saw data centers hit. We saw Amazon the data centers hit in the UAE. At one time, the UAE was going to be the international hub for AI because of the location to energy and the receptive nature of the governments there. And it was interesting. We started seeing data centers getting hit by missiles. That's a game changer. That is a big-time game changer. So I'm watching Bitcoin here. Am I bullish? Am I bearish? I mean, for a short-term trade, if somebody was interested, you probably could step up here and maybe bid right there from about 71-ish, which is about, what, about $1,500 down the queue, something like that. But you could definitely go spike low here, spike high, and you can sort of see our support zone would be right around 70,000. So, is that a great trade? No, not really. That would be a quick hitter, something you would do on an intraday basis. That's for sure. So you definitely want to keep an eye on Bitcoin, though, because I think that Bitcoin maybe is a leading asset. The worst is over, and we're going to see some rallies, maybe. I don't know if we can say that definitively, but it's interesting nonetheless. The VIX, we've talked volatility index all week long, and typically that's what you do during times of war. Remember our long-term average, right around 21. So the VIX still elevated. We saw a major move right there, and that was back on the 3rd of March. We went right up to 28.15. I like 30s. When I see 30s up there, that means the market's going to sell off. You're pretty sure you're going to see some significant bearish action, and we were up around 30. Didn't hold there very long, so back to normal. Really back to normal, and I'm very surprised at how this war is being priced. It's being priced aggressively, and now do we get another day of rotation? Is it rotation? Is it rotation Thursday? Potentially. We're waiting for the next shoe to drop. We're waiting for the next market driver, and that's going to be a ground invasion. And we're looking at that very closely. I'm going to run through the case for the ground invasion. I'm going to run through some of the factors that support that, and we're going to talk about that pretty much right now. Jason, yeah, good to see you guys. The big thing that we do also, though, want to talk about is the 9 EMA. I'm going to give you a quick look at an important safety tip when you're trading the 9 EMA strategy that can maybe keep you out of trouble. If you haven't traded it yet, be sure to head on over, check it out. You just get in there, email address, unlock strategy pack. You'll get the PDFs, you'll get the videos. Actually, the videos are right here on this page, but you'll get the PDFs, and you'll have the ability to download that custom EA that gives you pretty much everything you need to trade it. The EA, you just drop it on your chart. RSI pops up. 9 EMA is plotted. And then we've also got some, not necessarily signals, I wouldn't say, but indicators. You'll see that the 9 EMA, when you get in the midst of a trending market here, you can be in trouble. However, if you stick with it, that's the whole idea, is making a bulk of trades and walking away with money at the end of the day. You see right here, this 30-minute chart for Bitcoin, you lost this one, got swept up in this bonanza, but right here, that sell is still holding on. So if you want to know how to execute those trades, be sure to check the videos and things out. We'll do some of this live as well. I think we'll probably go with the EMA for about another week or two. And then we're thinking about developing something very similar for the 920, so you can trade that on your MT5. I really like the 920. That may be coming in the next month or so. In any case, right here, interesting move in Bitcoin. How about the Euro USD? Euro USD is really log jammed. It really is. I mean, we got that top side resistance. I'll show you that. I'm on TradingView here in just a second, but there's your 4-hour signal. There's your 4-hour buy. Hasn't really gone anywhere. Could have stopped yourself out right beneath that signal bar. That wouldn't have been a bad move because this market has the potential to fall away as opposed to risking the big money down beneath that swing low, which probably would be your conventional stop loss. I'm not real big on that, especially when you're looking at 4-hour charts. Sometimes it's just best to rip the Band-Aid off and move on to the next one. But for this, technically, this buy signal would still be in play. I don't know. I'm not really sold on that because of the resistance zone that is present in the Euro USD. 38% levels, they're no joke. They're no joke right there. Boom. There's your big move. There's the rebound, and then 116.50-ish has just been hell for the bidders. I mean, that has been a top of this thing for the last 2 days. So I would be, if you're trading the Euro USD, be cognizant of 116.40 to 50. There's a lot of selling in there. That's what you would call a supply zone. A lot of folks are just stepping up and shorting the market from there. You've got new shorts, and you've also got some of your profit taking that was off of these lows, right down around 115.28. Interesting stuff. Let me see, Packham. Shane, have you met some of these guys placing 50 lots on gold? No, I haven't. I can tell you that I talked to some of the folks in the back office at Switch, though, the other day, and there were some real horror stories about people trying to trade gold over the weekend. Seems like no matter how much, they must not watch the live streams because every Friday I give you guys just a speech on exactly what it is to carry a position over the weekend. And they, some folks just let it go. They don't believe that they can get hurt. And, I will tell you this, Packamp, there have been brokers that are going belly up. There are smaller brokers that you really, right now with this kind of volatility, if you work with a smaller broker that maybe isn't adjusting, typically you can tell when they aggressively adjust their margins. Like Switch only went up to about 2%. A lot of them are going. I got an email last Sunday from my futures broker, one of them, that put the overnight margins to 100%. I mean, you can't even really trade it at that level. So there's a lot of stress right now in the financial industry, but it is settling down. That's why you always got to pick a strong broker and one that is going to be in the game for you. And I always recommend those that are regulated. And honestly, the Trustpilot reviews as well. Those are big. Talk to other traders. Ask around. Quick payouts. Reputable, regulated. Go for it. Let me see. Tina Jing, pack up 50 lots on gold. Gold price swings so much like those indices too. Well, I mean, Tina, if you're talking about folks that have $100 million to trade, they'll jump in with 50s. There's some guys on YouTube that trade that kind of leverage. It's ridiculous. One lot on gold is absolutely huge. In any case, that is the lid on that Euro USD market. So be careful right up there. As far as some of these other trades, this was fascinating. You got a big juicy, and I mean a juicy 4-hour sell there on gold. That's fantastic action. Look at that. That was a couple days ago, but really got a big move, and now you're sort of compressed, and the question is do we make another leg down or do we head up? Well, I mean, sort of where we're at in this war, in our uncertainty, I still hold a bullish bias. I think that the metals can really explode to the top side if a certain scenario starts to unfold, and we're going to spell that out for you in just a second. Silver, same thing. So you really did have the sell in gold, the sell in silver, and it treated you pretty well. Now, if you go down to the lower time frames, not so easy. 30-minute chart, we're just waiting just to get outside of our, sort of what we call our hot zone, our 70-30. You can see right there, got a little bit of a bump there, but ended up getting swept out. You didn't get the big move, 30-minute there. That was just a breakaway loser. Well, depends on where your stop loss was. If you were up in here, you're out. If you're down in here, then you could ride it out. Challenging, though, and just remember that's an important safety tip, is when you go deep into these markets, deep into the granularity, 5-minute charts, 1-minute charts, 30-second charts, and you try to run something like a 9 EMA, there's a greater risk that you're going to get chopped up. So we're looking at silver right here on the 5-minute chart. This is actually fantastic timing. We've got a potential trade brewing. We were down here. We were in oversold territory beneath 30 on that RSI. Now we're looking for a bullish close up above the 9 EMA, and then we pull the trigger to the long. So let's go ahead and pull up our one-click trader. There it is. So we'll put one lot on, which for silver is a staggering amount of leverage. I mean, it's big. You know what? Let's just dial that down. Let's go to 0.50. No, not 1.5. We're not going to raise the risk. We'll go to a half lot, and even that's pretty big. But if we do get a bullish close during this, I'll get the alert, and then we'll go ahead and execute the trade, and that'll be our 9 EMA example for the day. Let me see. Yeah, you guys. Wow. Tina Jing, from Pack Camp, one of my countrymen just placed 10 lots on the drop on a $232,000 account. Big gains when it works, big losses when it doesn't. I like it. I like being aggressive. I got to tell you that, fortune favors the brave, right? That's why a lot of us are here. However, I got a problem with a USB drive. 1 second. Seems like it's always something with a tech, that's for sure. All right, we're back. Okay, let's go ahead and go over some of these fundamentals here. Let's start off with the news. I want to sort of take maybe a little bit deeper dive in where we're at in the Iran war. We had a request for the unemployment data. This right here, you're going to see there's a tremendous, and I mean a tremendous amount of jobs numbers out today. Challenger job cuts came in at 48,000. That was beneath the previous release of 108. So you could interpret Challenger job cuts a couple of different ways. I wouldn't get too caught up in it. Tomorrow's NFP, that's what I would be looking at. But as far as, what does it mean? What does the Challenger job cuts mean? It means typically if there's less job cuts, does that mean that they're done cutting jobs, or does that mean that the economy is expanding? It really is hard to say. But typically a low number there is going to be positive. So it was a pretty good print, at least compared to what we saw last time. I wouldn't put too much stock in that, though. But there's the big one for today. Initial jobless claims, 213,000 beneath our estimates of 215 and the previous of 213. So what is it? It's unchanged. It's just a nothing burger. I wouldn't get too wrapped up in initial jobless claims today. Tomorrow's NFP. I'm going to preview that for you a little bit later today on our broader live stream. It's 1600 GMT. So feel free to come on back then. But I wouldn't put a whole lot of put a whole lot of stock in that at all. You see all these different numbers: price index, non-farm, continuing jobless claims, 1868 over estimates of 1850, and then over the previous. So those continuing jobless claims, that means those rolls are growing just a little bit. People are staying on that unemployment insurance a little bit longer. That could be seasonal, though. It is still kind of the tail end of winter here, so there may be not a lot of impetus to get off the couch and get out in the cold. We really don't. I would be watching that trend, but I wouldn't be watching it closely. We want to see the big numbers. As far as factory orders, all that stuff, you don't have to worry about that. So we're just not quite into the range of what big numbers. There just isn't anything there. It's all about the war. Natural gas storage, we'll talk about that in a minute, but that may impact the natural gas market. Well, it will impact the natural gas market, that's for sure. So that may be a good market to cover. We still have a trade idea there that I don't know if it's going to set up or not. We just got to wait and see. Okay, so let's talk a little bit about Iran and then any markets you guys would like to look at. Why the Iran war oil price shock won't stop Fed pick Kevin Warsh from cutting interest rates. So we talked a lot about Warsh. We talked a lot about Trump. Trump nominates Warsh, and the deal is you're going to cut interest rates. And we saw some ominous tones out of Kashkari and Williams on Tuesday that were talking about holding rates higher for longer. It's right in here somewhere, but in any case, the most likely response will be to validate an extended pause, and that's pretty much was the consensus among these Fed members. I had a lot of confidence until a couple of weeks ago. Now he said he needs to see more data to make a judgment about interest rates. So that's Kashkari deciding that they're not going to do anything. New York Fed President John Williams said how persistent this is. So basically, they're going to use the war as a reason to not cut interest rates. So we knew Jay Powell wasn't going to cut interest rates before he left. But now Warsh comes right in and says that he's going to go ahead and cut no matter what. Warsh sees it differently. The Fed leadership blamed inflation on Putin. Warsh told Kudlow in July, the Fed's core theory of inflation is mistaken. Warsh told Barron's in the fall. That means that when Warsh gets in there, if they can get him through the Senate and Congress and all that jazz, when he gets in there, he's going to change the entire dynamic of the Fed. And what that's going to mean is it's going to mean aggressive rate cuts and a weaker dollar. So theoretically, you wouldn't cut interest rates if oil prices are high, right? You wouldn't do it because that would send them higher. Well, Warsh doesn't care. He's cutting. That's what he has to say to get the job. So this is interesting to me. At the core, I think inflation comes about when the government spends too much and prints too much. So he's going to go ahead and point back to the fiscal spending. We're going to go ahead and cut interest rates, get the economy going, yada, yada. The inflation's not our fault. It's your fault. I think it's interesting. I really do. But that is absolutely huge, especially when we're talking about something like gold. So you've got gold right here that, what happens to gold if we see a very bullish move, if we see a very dovish Fed? It's going to send it higher. I mean, it really is going to send it higher. So you've got geopolitical uncertainty. You've got Russia, Ukraine. Nobody's talking about that anymore. Still going. You got Russia, Ukraine. You got U.S., Israel, Iran. That's the biggie. That's what's on everybody's mind right now. You've got China potentially moving on Taiwan in the next 18 months. That's huge. The geopolitical uncertainty, you've got cartel action in Mexico. You got the Venezuela situation. You've got unrest in Cuba. The world really is on fire right now, and every generation's thought that, but this really is in front of our face. We can see it. And what all this uncertainty means is that your metals markets are probably poised to move significantly higher in the next 24 months. Unless we see the peace tour of all peace tours, settling wars on 4 different continents or 3 different continents within the next year, you're probably going to see gold trend higher. Now, we're not seeing it now. This was really a nice run that we saw, and then the big sell-off that came on the 3rd of March, and then we got the real tight yesterday. You're getting another real tight action today. And does NFP move this? Probably not. Now that we've got the war as the market driver, probably not. But maybe a weak jobs number suggests that the war is going to be over sooner for political reasons. Who knows? Who really knows? What we do know is this. Gold has settled into rotation right around our 13-day EMA, which is at 51.34. So if we're talking about how to trade gold today, I think it's really tough. I'm not kidding you. I mean, I can see exactly where the breakout would have developed. You would have sold beneath yesterday's low and got a runner through this weekly low beneath 5,000. That is where the damage really would have been done, and it's not happening. It's not happening. You're trading right at that moving average for whatever reason. Our 13-period EMA is lethal. I highly recommend it. It's very good. But right here, what do you have? Did we trade beneath yesterday's low? Yesterday's low right there, 5,085.13. The low right there is 5,081, and we've since bounced, about $40, $45, $50. That's what we call a failed auction. A failed auction is when we just test the waters beneath a previous range, and then we rotate right back up into the range. It means that the sellers weren't there. Some folks entered the market to the short, and they got absolutely hammered. It's a failed auction. Watched them all day yesterday to the top side on the Dow 30. Watched them all day. So this right here, they were just waiting. That was bait because theoretically, with a gold market the way that it is, you would be playing a breakout beneath a previous day's low. In the futures markets, that's huge. We actually did that article on Business Insider about that strategy. It's been very, very good over the years. This right here, that's failed auction. That bounces back up, and now we're still looking at the huge level. And what's the huge level? I mean, the bottom line is this. Going into NFP, we're watching 5,000 like a hawk. I mean, we thought we left 5,000, and now we're right back down to 5,000. We're right in the neighborhood. We're at 51.24. We're in rotation. We could definitely break down and check that out. This is going to be a touchy situation. This is really going to be a touchy situation because the biggest thing that we have to remember is the weekly low. The weekly low is right down there beneath 5,000. We're at 49.96. So if you do get a test of that, you're probably going to see some real bearish action. If you go beneath 5,000, look out. I mean, look out. Now, how can you trade 5,000? You could scalp right in front of it, 5,002, 5,005, somewhere in there, 5,750, maybe even 5,010 would be a pretty good bid down here. But what you don't want to do is you do not want to be holding short, or holding longs when that market breaks beneath that long-term level. Well, it's not a long-term level, a weekly low. You don't want to be there. That's how I'd be looking at gold. As far as how else could you trade it, I mean, we could throw Fibonacci's on it if you want. Nice 2-day range there. You can see you're just sort of stagnant. 50%, ranging around 38%. I'd forget that for right now. Maybe if you got a rally up in here, you could sell. But I would be very conservative, very, very conservative about what I did to the short side. unless I'm playing a breakout beneath that low. If that's the case, then yeah, you could probably scalp that for a few bucks on some nice momentum. But as far as the rest of this gold market is really, really, really tenuous right now. Consolidation, it's the calm before the storm. We know we're going somewhere. We just don't know where. Can interest rates send gold to, let's say, the moon? I mean, realistically, we're talking about a world where we're going to go into a rate cut cycle, and you've got essentially a budding world war. Yeah. I mean, realistically, we've set up here for 2 months. 3 months we've been trading 5,000. This right down in here, this compression pattern, it's not as good as this one that was trading right around 32.50 before we broke and basically doubled in price, pretty close. What happens now? Well, if we trade around 5,000 for the next several months, and it's possible, you're starting to look at 7,500s. You really are, especially given that scenario, geopolitical uncertainty and low interest rates. A lot going on there with gold, no question about it. Right now, though, intraday style, I don't know that it's the best thing to trade. I don't know if it's the best thing to trade. That's for sure. As far as what we have going in Iran, and that's the purpose of this live stream, sort of what we're going to present here is some ideas that I've heard a lot. And essentially what's happening is you've got, well, my story got changed right there, but that's okay. What you've got is missiles. You've got a war of attrition developing. You've got a situation where Iran has a ton of cheap missiles. And the real question that we run into is, do they have more missiles than Israel has missile defenses? That's the idea. And you can't really get past the fact that it's a waiting game. Let's be honest, Iran's facilities, their missile manufacturing, they can build these things cheap, and they have a lot of them. They're deep underground. It's a mountainous region. They're underground. We had to go deep to get to the nuclear facilities. They've supposedly got these things all over the place. So the factories are underground. The missiles are underground. The facilities are underground. You can bomb them and bomb them and bomb them and bomb them, but can you really reduce the amount of missiles they have? Now, there's a lot of talk saying, well, they're just about out of missiles. Well, we know this, that it takes, 5 or 6 of the interceptor missiles to intercept one of the missiles coming in. So the idea is that, well, we're going to shoot enough missiles to eventually they're going to run out of defense missiles, right? And then the idea is then, okay, then we've got full control. Now, is that true? That's pretty much the prevailing thinking right now. That's why the United States wants this war over, and they want it over fast, because they know from an interceptor standpoint, you just don't really have enough of them to go up against thousands and thousands and thousands of these missiles. And we saw more of it today. We saw more of it during the overnight, just spraying missiles all across the region. So if it's a war of attrition, who runs out of missiles first, or the missile launch sites, or any of that, then we have to say, okay, does Iran have a chance to hold out? Let's say they hold out for 3 or 4 weeks. Let's say they hold out for 5, 6 weeks. Let's say you're still shooting missiles in June. Where does that put us? It puts the whole Middle East in a very precarious position. It means that all the targets that are protected in the UAE, places like Dubai, Qatar, targets in Israel, also U.S. targets, military bases and things, all of that stuff becomes in jeopardy in a big, big way. And the damage factor from these random missile attacks really goes up. So if you actually look at the way that the attacks are being dispersed right now, you're seeing a wide range, a huge geographical area that is being targeted. And the reason why is they're exhausting defense missiles from every area. That is not it doesn't take a genius to do that. That's just what it is. So if you can end the war quick, the impetus would be to do so. Can you do that with air power and the missiles that we're bringing in? Well, I don't know. We're starting to see this kind of thinking right here. Iran Shahed drone, how the poor man's cruise missile is shaping Tehran's retaliation. Supposedly they have thousands of these things, thousands and thousands and thousands of these things. They're cheap and easy to produce, while interceptors can cost millions. This is the idea. Russia's wartime use in Ukraine helped prove the drones' battlefield effectiveness. This is what's happening. You're actually seeing technology sort of level the playing field a bit. I know that sounds silly because we see these amazing pictures, and the United States and Israel are really having their way in the airspace. But will it matter? In the long run, will it matter? Can you knock out enough of these facilities to make this thing a winner over the long haul, maybe over just a 6 or 8 week haul? We don't know, and that's why you're already starting to see it. We're talking about ground invasions from Kurdish groups. U.S. reportedly launches proxy ground war with Iran. Kurdish forces can be the key to bringing down the Iran regime. CIA working to arm Kurdish forces, and those Kurdish forces are up right on the border between Iraq and Iran in the northern part of Iraq, and they're talking about going in. Now, do you have enough? Do you have enough Kurds? Are there enough Kurds to take over? Probably not. You're talking about 250,000 armed Iranian regulars in the defense and their army. They haven't taken a huge amount of casualties yet, at least on any sort of battlefield, because there isn't one. You're just hitting hard targets right now. So what happens? Okay, the Kurds are going in. Is it enough? Probably not. Probably not. Check these odds out. U.S. forces to enter Iran by when? March 7th, 6%, 21%, 35%. 58%. We're pricing a 1 in 3 chance that by the end of March, you have U.S. forces in Iran, boots on the ground. That's a whole new ball game. That's a whole new ball game, because now we're talking about taking casualties. We're talking about all sorts of things. So when you start looking at things, like a U.S. oil, like a UK oil, like gold, like silver, what happens? What happens in this event? What about the U.S. dollar? What happens when boots are on the ground and we're looking at the dollar? When the U.S. goes in, boots on the ground, how many soldiers are you going to send in? You going to send in special ops? I would be surprised if they send in regulars. But if they do, now we're talking about a full war, and you're going to need an act of Congress to do that. You'll probably get it. My guess is you'll probably get the votes. That changes everything, and that is the number one market driver I'm looking at right now. It seems like right now the United States is posturing. They're trying to throw the knockout punch. I mean, we've been doing this for 5 days, 6 days, trying to throw the knockout punch. Haven't really heard much out of Iran, just scattershot missile replies. What happens next? The next logical step, especially if this goes into week 3 and week 4 and week 5, the next step is going to be ground troops. There's no way around it. You're going to have to find a way to stop the missiles from being fired. And if you're out of interceptors, you can run airstrikes all day long. But when you're talking about just shooting these things out of the back of a pickup truck or something, you're going to have to be on the ground. And that's going to be a real, real problem for a lot of folks. Politically here in the United States, it'll be suicide. That'll be the end of the Republicans in the midterms. And that really will change everything with regards to what our markets look like. You're going to see impeachment proceedings next year. You're going to see the whole Marianne. And what's going to happen is chaos politically here in the States. What happens to the dollar throughout all of this? When the boots go on the ground, the dollar is going to get a little bit stronger. It's going to be a safe haven. People are going to go, we're going to go ahead and do this because we don't know how this war is going to pan out. Essentially, we'll be right up there around 101 if that does happen. Now, right now, it's sort of hanging in bearish territory, 99, 99.09, somewhere in there. But this is very, very fascinating right up in here because it's robust topside resistance. This 13-month EMA has been gold, 99.53. We're back down to 99. Pretty good scalping from there. Still very much in bearish territory, but this could go bullish. If a ground war goes in there, it goes bullish because then we start talking about all sorts of different scenarios, especially if it's a large-scale invasion. You got to remember the United States sent 200,000 into Iraq. On that initial, I can't remember the name of it, but the siege, desert siege or whatever they called it, they sent 200,000 soldiers in there. Iran's 3 times the size, huge population, much larger standing army. If you start talking about conventional warfare, and listen, all the politicians right now are saying, no, believe me, behind closed doors, they are talking about it. They're talking about it in a big way. We have to be ready for it as traders. So in any case, 101's huge for this dollar index. As far as some other trades maybe for today, I'm very, very cautious. Very, very cautious about all this stuff because I'm waiting for that big announcement that's going to roil markets. And Trump has a way of doing that. So let's go ahead and just pull up a quick look. Let's look at the US 100, for instance. Very simple analysis here. Monthly chart, what do you got right there? 25,000. There's sort of your bullish flag that's developed right around that area. I mean, think about how many months in a row we've traded 25,000. 1, 2, 3, 4, 5. Is 25,000 the top? We've got to start considering that maybe it is. So all these war resources and all these resources that are heading into direct conflict and into battle, are they taking away from that AI boom? all of a sudden is the energy, all the energy resources, all the superconductors, all of that stuff that was going into the AI facility infrastructure, is that going into a conflict, in a military conflict? It looks like these guys are pricing that the AI boom is going to slow down. 25,000 consolidation for 6 months. Now, a couple of things we can read out of this. Number one, we're still very bullish. Still very bullish. There was your big move coming off of last April's tariff craziness. Boom, there was your big move right to 25, and now we're rotating. Does this market break above 25 and really run, stretch its legs? The formation on the chart suggests that yes, at some point. However, when you factor in what's going on in the Middle East, you can't really just go guns up and say, okay, we're going to buy the US 100 and make a stack of money. That won't work for us. We've got to be a little more precise. If we're trading the NASDAQ, I mean, we'll go down to the short time frames, but big picture, we're still bullish. Compression around 25,000 is everything. It's everything. So, but, we're not trending anymore. The trend is still present, but we are not trending. We are flatlined for the last 6 months. We're waiting for a break. We want to see a break and a run. And if we get that, we'll have an opportunity maybe to trade. But for right this minute, very difficult trading in the U.S. indices, specifically the NASDAQ. All right, I just got an alert. Let's see what our alert says. Okay, there it is. We're going to go ahead and buy the silver market. 9 EMA trade. A couple of options. We could put our stop loss right beneath the trigger bar there, 5-minute chart, or we could put it right down there beneath that swing low. Let's go ahead and put it beneath the trigger right there. Always pad these a few pips. I don't want to see anybody get burned by the thing just hitting your stop loss and potentially just rotating back up to your profit target. That would be the trade. Is it a good trade? Is it time to do this? Right before the U.S. Open, we know there's a lot of liquidity in the market. There's a lot of action, a lot of people trading. Pretty good time. Our timing to take this 5-minute chart, yeah, it's probably decent. The only problem we really have is it's flatlined, really flatlined. Does this open up into the U.S. Open? Well, it's a position. So think about what we have here. We've got our entry down. We've got a profit target and a stop loss. So our stop loss probably saves our bacon. If we lose, coming against us now, almost religiously, price pulls back to that 9 EMA. Is it a trend? No, it's not really a trend. What gives us the best probability is to have a stop loss beneath this swing low, which coincides with this oversold territory. This is more of a tight scalp. This means we need price to go right now in the next 5 minutes or so. Is it happening? No, it's going against us. We're down. Look at how much action that is, though. That's a half a lot of silver, and we're already down, what, $600, $550, something like that. Interesting stuff. 9 EMA is a fascinating strategy because sometimes it really works, and other times you could just bet against it and be great. This situation right here, clearly, we have no slope at all to the 9 EMA. We are flat, so essentially you're looking for a breakout type of a mentality here. We didn't really get it. It's rotating back down into this range. Looks like we're going to get stopped out. Let's give it another minute or two. Personally, I don't mind getting stopped out right away. It just means we get to go on to the next trade and we were wrong. And usually, if this thing gets stopped out, we're going to be on the wrong end of a breakout, which means we want to get out. But right here, where's the impetus going to come from to get the rally? If you're lucky, you probably could hang around till the U.S. Open and get a rush of volume and maybe go up there and check out your profit target. But right this minute, this thing's getting stuck pretty good. Rotating back down. Stop losses are your friend. All right, everybody. So that's sort of a depressing look at what's going on in Iran. Also a depressing silver trade to start the day. We're going to let that steam just a little bit. I'll get back to it in just a second. There's a couple more things that I do want to watch or go over, though. S&P 500. I get a lot of questions about the S&P 500. So is this area, this S&P, is this better to trade right now than the NASDAQ? I don't know. I mean, the beauty of this is that the top, we know where the top is. The top 7,000. That's the game. That's the big game in town. Right around 7,000 is huge. Very bullish. Very, very bullish. Is this still sort of a bullish flag as well? Yeah. But the beauty of this is it's beneath your key level right there at 7,000. That NASDAQ is straddling 25,000. Tells us it's rotational. It's going to take a little bit more to move that one higher, in my opinion. This S&P 500, if you do get a clean break above 7,000, you're probably going for a bit of a walk, which is fantastic news if you're a trader. I would run these Fibonacci's, but they're pointless. Something like this. This would be a major correction down here to 61. That's something we'd be looking at maybe later in the year if this Iran situation brings a major market correction to U.S. equities. For right this minute, take it down to a daily. Really difficult trading. I mean, no question about it. Your all-time highs right up here, somewhere in this zone. tested them, rotated back down. Now we're just moving sideways. If you wanted to trade potentially for today, I wouldn't be worried about the Fibonacci so much because the market is flat. But that lower Bollinger Band potentially could be pretty good. You can see the rotation's been there all week long, so that area probably more than likely looks to me like it's going to get tested. Your lower Bollinger Band right down there is what, 67, 86-ish. So maybe, somewhere in this vicinity down here could set up to be great downside support. It might actually pan out and be a decent little bid for later today. How would you execute that trade? Well, you'd have to bring your leverage down a bit. You probably want to go right on that lower Bollinger Band there, and your stop loss probably be beneath yesterday's low. So you got to decide if that risk is really worth it. About 27 points. In order to make that worth it, you'd have to get a profit target right up in here. It's very doable. I mean, it really is very doable. The big question is how does it unfold and when does it unfold? Do we get that on the open or close? Right now, this is full rotation in the S&P 500. All sorts of different trades are viable. I would avoid things like the orb. I really would. This orb trade yesterday, if you go back, just walk in our way back machine. But if you go to your orb yesterday, what did you have? Right there. Let's see. Right in here would be your open. Yeah, that was yesterday. It was really a nightmare, especially on a 30-minute. So that would have been sort of your trade right there. Opening range breakout. You're waiting for a breakout. When did you finally get it? You got it midday, and then it just was miserable. Rallied up a little bit by the end, but it was just absolutely miserable. Brutal trade. Really a brutal orb. Was it any better on a 15-minute? They made a little bit of money if you were aggressive, I suppose. So right there would have been 1, 2. That would have been your range. You'd have bought. It wouldn't have worked for you. You'd have bought right up there on your breakout, and then you would have flatlined. I would really, I don't know about playing orbs today. Be careful if you're going to do that. That's a real challenge, especially when we see a daily formation in a market that's just in as much rotation as the S&P 500 is. All right, let's see. If we don't have any questions, I'll go back and check out that silver trade, and we'll go ahead and call it a day. I don't know how it's doing. It's flat. Pretty much flat. Down a little bit. Still, though, you're basing right around that 9 EMA. We'll see. We'll see if this thing gets some love going into the U.S. Open, which is in about T-minus 19 minutes. All right, everybody, I want to thank you for joining me bright and early today. I've got the dark circles going because I have been awake for a while. It's been a long week, but it's been a fun week. Bit of a challenge, I'm not going to lie to you. Probably one of my down weeks, I would say. But definitely still fighting, still in there, still going. I think that we're going to get some good trades today. I'm still looking at commodities, gold, crude oil, things like that. As far as the U.S. dollar goes, great resistance in that Euro USD. We went over that. That's a good trade. Maybe we'll look at some cross pairs a little later today and give us an opportunity to diversify away from that U.S. dollar. All right, everybody, I'm going to sign off for now. You're absolutely welcome, Tuku. Thank you for joining me. We'll be back at 1600 GMT with our typical live stream, our mid-session brief. And then tomorrow, actually at the mid-session brief, we're going to go ahead and tee up and preview tomorrow's NFP report. And we'll also be back live for NFP tomorrow at the same time right here. All right, everybody, have a fantastic trading session. Trade the action well, and we'll talk soon. See you.